Joining me now to talk more about the economy, the market, and jobs is Danielle DiMartino Booth. She's the CEO of Q Research. Danielle, great to have you on the show there. Hope I got your company name right. You're a chief strategist as well. And we want to hear from you what you make of this market.
Well, I think your characterization is pretty on spot here. We're seeing a lot of chop. I think we're going to continue to see a lot of chop. The market is really confused at what came out this morning on the big Friday jobs day. I think a lot of that has to do with the fact that the U6 underemployment rate jumped from 7.5% to 8%. There are a lot of Americans right now who would take a full-time job if they could get one. And I think that that's what's key here. US GDP is 70% consumption. And right now, people are not earning enough income to consume as much as they would like to. I think that kind of sums it up right now.
Interesting. So I do want to talk trade, Danielle, because that's been a key factor driving markets this week. We are trying to get more clarity around trade policy. What does this mean for the economy?
So I think that the Trump administration has gotten the memo, so to speak. They know that on any given day, an average car, that the parts that go into it cross the border 8 different times before the car is actually completely produced. And so I think that there's a little bit of reticence on the part of the administration in terms of imposing these large tariffs. So I think that even come April the 2nd, there's going to be a pullback from the Trump administration, not pushing through the types of tariffs that we're seeing. I'd like to think that Treasury Secretary Scott Bessent is going to be much more targeted and make sure that American manufacturers are not on the losing end of these tariffs.
Yeah, we did hear comments from Treasury Secretary Scott Bessent earlier this morning before the market opened, Danielle. He did note that the economy is starting to roll a little. Again, the jobs report this morning, a hair below expectations, 151,000 as unemployment ticked higher. But we've also seen consumer sentiment really take a turn lower just in about the past 4 weeks or so. What are the signs that the economy is telling you?
Well, since you mentioned that, when over 50% of Americans feel that the unemployment rate is going to be rising in the coming 12 months, that is usually a sign that the U.S. economy is already in recession. Not flirting with recession, but already in recession. And I think that that's what Treasury Secretary Bessent was alluding to this morning, is that most Americans feel right now that the economy is going in the wrong direction. And as President Trump said just yesterday, we may have to go through some short-term pain to get to long-term gain. And I think that that's where the focus should be right now.
What does that mean for interest rates? The next Fed decision is going to hit in just about 10 or 11 days, and then we won't hear anything from the Fed. At least its next scheduled meeting would be early May.
You're absolutely right. I think market participants are going to be focused on what Jay Powell has to say at 12:30. It's highly unusual to see the chair of the Fed be kind of the caboose, if you will, of Fed speakers on that last day before, as you mentioned, the close of business today is the beginning of the FOMC blackout period until we hear from them on March 19th. One of his chief lieutenants, Christopher Waller, a Federal Reserve Board governor, did say yesterday that he expects up to 3 rate cuts this year. So I think we're going to see the market begin to price in more than the 2 rate cuts that it was assuming at the beginning of this year. My baseline is that there will be 3, if not 4 rate cuts this year.
Yeah, that's interesting, Danielle. So how should investors navigate this?
Again, to go back to your first word, copy. We're going to have to be prepared for a lot of volatility in the markets. It's going to be very bumpy from here on out. We did see Challenger Gray and Christmas layoff announcements yesterday, top over 172,000 for the month. That's the highest figure since 2009. Nobody likes to hear that year, 2009, because it harkens back to the Great Recession. So again, I think the United States economy is probably in recession as we speak, and that investors and U.S. households should be buckling up for the bumpiness that's to come. But again, that's how Reagan's first administration started. The United States economy came out of it clean, and we set off for one of the biggest bull markets in the history of the country.
Danielle DiMartino Booth, great to get your insight as always, especially on a busy day and a busy week. Thank you.
Thank you.